Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for August 18th, 2024. And as you can see right over here, we've got a lot happening this next week. The big event is going to be at the end of the week. We have Jay Powell speaking at, I believe it's at 10 a.m. Eastern on Friday at Jackson Hole. But we still have a lot of things happening this next week. And I'll tell you what, this week was absolutely crazy. Lack of liquidity, economic data is making the markets fly around, so you've got to be on your toes. You know, a few weeks ago, maybe about a month or two ago, I promised that this summer is going to be a lot of volatility due to the election upcoming and the data. We're so sensitive to the data, and this market has not disappointed. There has been a ton of volatility, almost too much volatility, but could you ever have too much volatility for traders? I don't think so. Anyway, we're going to talk about all these events that you see up here and more, so make sure you stick around. Also, if you feel that these videos are beneficial to you and they help prepare you for your trading week, give me a thumbs up, give the team a thumbs up, jump down in the comments below, especially if I miss some economic data, because sometimes I do, and that's just kind of part of what I do. So anyway, let's go ahead and get started with everything that's happening this next week and what we've got going on. So I do want to mention that if you haven't tried out Forex Analytics, you should do so. It's only $1 for 10 days to try it out. Make sure you download the mobile app when you're doing that, and then you can be in the chat rooms with me. You can read through all the analysis that not just myself, but the rest of the team posts throughout the course of the week. You've got all these great tools like Data Flash. You have Live Squawk data feed. You have the chat rooms where you can see exactly what I'm trading, when I'm trading it, what other traders are doing as well. And as we get in and out of the market, plus you have the general chat rooms too, and we talk about everything that's happening. Different headlines that come out. Different things that are moving in the markets that you'd want to talk about, and different type of analysis from all sorts of traders. Not just me, but if you want direct access to me throughout the course of the week, that's where I'm at, is in the Forex Analytics chat room. There's plenty of chat rooms in here, not just the general chat, trades room, S&P room, news and research, Flownomics, which is the macro chat room. Lots going on, and plus we're gonna have our majority of our team is gonna be back. We have Ryan and Cayman. They're coming off of holidays this next week, so it's gonna be a very busy week, especially in the markets. All right, so let's talk a little bit about what happened this last week, because and let's just start here, and I'll just put up the S&P really quick and just kind of zoom in so you guys can see just the massive amounts of volatility that we saw this week. Obviously, stock market had recovered, but this move here doesn't look as aggressive until you kind of zoom in. This was from I say yesterday. I'm actually filming a day early than I normally film. So I'm filming on Friday because I have some things going on over the weekend, which I normally film on Saturday mornings. But this week on Thursday, we had weekly unemployment claims and retail sales, and it basically, you can tell how poorly positioned the market was. And I'll tell you, the market was moving against me at this point because I was short some dollars and I was short some yen pairs, and so this move higher, caught me wrong-footed. But you can tell it caught the entire market wrong-footed. A lot of people have been leaning into the stock market rally, but this recovery is going to fall short, and we've just been squeezing. I consider this a bear market rally thus far, but next week is going to be really key, especially with Jay Powell on Friday. But there's so many other things that are happening between now and then. So let's get started with let's talk about Monday. So Monday is going to be fairly, like last week, it's going to be fairly slow. Monday night, we have China 1-year and 5-year loans. Aussie is going to have monetary policy meeting minutes. Now, the thing about the Aussie, let's go talk about the Aussie really quick. And you got to look at this chart. I mean, just a massive move. We closed above the 50 DMA. Now, I'm going to tell you that the Aussie, we were looking for obviously longs. You can see the Aussie has rallied sharply following. You remember last week we had a bullish outside week? Well, it played into this week. We closed out at the highs of the week. So the Aussie is closing in on the 67-cent level. Now, what's going to be, I think, really key is as we move above 67 cents. Now, the Aussie monetary, the RBA's monetary policy meeting minutes. I don't think that's going to be what moves the market this week. If you're talking about the Aussie, I think it's going to be risk appetite. So basically, if stocks continue to go higher, the Aussie will continue to rally. Same thing with copper. If copper continues to rally, and assets in general, then you're probably going to see the Aussie rally as well. But we have this triangle that's going to be coming up relatively soon. I'd say above 67 cents. You have to really start being a little bit more cautious with any Aussie longs. But like I said, we went out this week at the highs of the week. Now, this weekend, there's supposed to be some Israeli Hamas peace talks or ceasefire, exchange of hostages. It's a very delicate matter. That could obviously fall apart at any moment over the weekend. And plus, you have to realize that these peace talks right now are just temporary to try to exchange hostages and whatnot. But I would be surprised if this is the end of this escalation. Both sides are obviously very heated, and I think that this is just a temporary situation. But anyway, the reason why I mention that is because you don't know what's going to happen over the weekend. But if nothing happens over the weekend, that means risk should continue to rally. That means the Aussie may continue to climb towards 70 cents and maybe even beyond that towards 70. Did I say 70 cents? I meant 67 cents, excuse me, towards 67 cents or 67.70, which will be, about 100, 150 pips away from where we currently stand. I think that's entirely possible this week. All right, now, again, we have the Aussie monetary policy meeting minutes. That's going to be Monday night or Tuesday morning in Australia. But Tuesday is where we kick off some major events. First of all, Swiss National Bank Jordan is speaking. Now, if you remember last week, I was looking for a short in the US dollar Swiss franc right at the 87.35, 87.40 level. Well, guess what? I'm still short. And I got short this week, actually on Thursday, still short going into the weekend. It's still pretty weak, and it rejected where we wanted to reject. But it's going to be really interesting to see if Swiss National Bank Jordan, if he tries to talk down the Swiss franc before. He did back at the end of last year. I don't know if we've had a big enough recovery where he's going to even mention anything, but you got to be on the lookout for that early next week. That's going to be Tuesday morning. Also, what's happening on Tuesday, you're going to have Mexico retail sales. Now, this is not the only Mexican data that's coming out. We have at the end of the week, actually at the end of the week, we have Mexican GDP. So let's take a look at the peso really quick, and I'm gonna actually keep this one in focus throughout the course of this week ahead video. But you'll see that the US dollar Mexican peso is closing in on what I consider a very big pivot in the market, which comes in around 1850. We've talked a lot about that 1850 level in prior weeks. Let me clean up a little bit of this chart for you, and let me go ahead and go from to low to high. You'll notice that we're at a 618 retracement. We got the 50 DMA just below that, and obviously a ton of support below there. And if you just look at this as like a channel, which it could very easily be an ascending channel, you can see just below these levels will come the 50 DMA, then you're going to have 1835 or so. So a lot of really critical support. Notice that the spike high way up here around 20 hit that channel resistance, channel support just below. So you can see a lot of really critical support heading into this next week in the US dollar Mexican peso. Moving right along, we have the highlight. Well, I want to say like the highlight of the week. One of the highlights of the week is going to be Canadian CPI. Now, let's just take a step back really quick and talk about inflationary data globally. And you talk about this last week, US CPI and producer prices. You can see disinflationary data continuing to come in. Next week, obviously, we're going to be very focused on what's happening with oops, didn't want to do that. Let me go ahead and get rid of that. Guys, sorry about that. My bad. Wrong window. Give me 1 second. Here we go. All right. Sorry about that. This next week, we're going to have Canadian CPI, and probably what the market's going to be looking for. obviously is a continued move lower, especially in the core CPI, Canadian core CPI. The headline number also month to month is supposed to go up, but not the median CPI year over year. It's supposed to actually go down. So the dollar Canadian is going to be obviously in focus this next week. And what I need to do here is I need to actually delete some of the drawings and get us a little bit more up to speed, since I've had the dollar Canadian off the radar here with us on the week ahead video in recent weeks because of the I figured it was going to fail up around the 140 level. I think we've talked about that in past weeks. We've talked about, like, I'm very nervous about trying to chase it up here. We've obviously come back down. CFTC positioning has been very lopsided, but now, that we've come off these levels, you got to start looking at the dollar Canadian as being more of an opportunity to be on the long side. See, I eventually think the dollar Canadian is going to break higher. I eventually think the dollar Canadian is going to break out of this base, and it is going to go eventually higher than you see right here. A lot of it has to do with the dollar index, but also I believe that the Canadian economy is going to probably start suffering before the U.S. economy. Therefore, the Canadian dollar, I'd probably want to be more of a seller of Canadian dollars around these levels than a buyer, meaning that I'd rather be on the long side of the dollar Canadian than the short side. But we're still a little bit away from support. You can see this real critical support coming in once again around the 136.10 level. You got the 200 DMA. But if you look at from a Fibonacci standpoint, just this last big move, the 38% retracement is not very far away, and that will also coincide here. You'll see the 78% retracement. Let me go ahead and change this one up. And then you'll see a confluence between the longer term 38% retracement that we just talked about, the longer term, and the near term 78% retracement. We got this confluence that really comes in around 136.60, 136.50. So I'd imagine that these levels offer a lot of support moving forward. Now, the Canadian data is going to be the predominant driver early in the week, especially with this particular pair. Obviously, we're looking at dollar weakness almost across the board. I'll come into the dollar index in a little bit when we talk about the PMIs that are coming up on Thursday. But right now, we're going to be focused on the US dollar Canadian. And if the Canadian data is weak, we could really see a rally off of this key level of support, in my opinion. And that's not very far from where we're currently at. We're talking about 20 or 30 pips below where we closed on Friday. So early in the week, you might look for a pivot off of these levels. Now, continuing on throughout the week, on Wednesday, we have South African. Oh, I want to show you this one. I haven't taken a look at the Rand in a while, but we have South Africa inflation. But take a look at this major support level that was breached at the end of this week. I actually tried to play the South African Rand on the long side. Earlier today, you could actually see it if you go over to the trades room, and you can see I took it off for a very, very small loss. But if you're in the trades room, let me go back here. Let's see. I was reducing risk, and I took the dollar Swiss franc, or excuse me, dollar South African Rand, excuse me, somewhere around here. Oh, right here. I took it off for just a small loss. And, that was me trying to play it off of this support here. And by the end of the day, well, actually for me, it was within about an hour or two. It just kept drifting lower. So I just decided to play it or take it off. But see, I was playing it off of this long-term trend line, thinking that we might get a break back above 18 and maybe a false breakout. But that didn't happen by the time I wanted. So I just got out of it. But you can see the dollar Rand is really probing some major support here. And if we get a breakdown, and let me delete this. I don't think we need this trend line here. And let's take a look at some extensions really fast, just in case. How about if the South African inflation comes in stronger than expected? Could we continue breaking down towards the low 17 level? I think it's entirely possible. So for those of you that are looking to play outside of a triangle formation, this might be a great opportunity for you going into next week. All right, Wednesday night or Thursday morning, we're going to have Aussie and yen flash PMIs. Now, I'm not going to talk about the yen just yet. I'm going to come back to the yen when we talk about Japanese National Core CPI coming in on Friday morning. So I'll get to that in a bit. But we also have on Thursday, we have Norway GDP. Now, last week we talked, or maybe 2 weeks ago, we talked about trying to get a rally in the US dollar Norwegian krona back up towards 11. That didn't happen. Norges Central Bank, when they met this last week, or this week rather, it really, gave the market the idea that they're going to stay steady for quite some time, and the US dollar Norwegian krona continued to drop. We saw it aggressively drop, after the Norges Central Bank. But fact of the matter is we're coming into some really critical support down here, whether it's 1060, whether it's below that at 1035. These levels are going to be really important. As you notice in a lot of these dollar pairs, we're forming triangles, trying to break, the Euro dollar closed above 110. It's the first time we've closed above 110 in quite some time. And I'll go into the euro in just a few minutes. But these triangles are, if we start breaking down in this example, like if the US dollar Norwegian krona is breaking down, but we've got the Aussie breaking out, we've got the euro dollar breaking out, you got the sterling breaking out. I mean, that's just showing you that the dollar is weakening across the board. So keep an eye on the US dollar Norwegian krona, especially with GDP coming in on Thursday morning. Now, speaking of on Thursday, early Thursday for me anyway, or for it's going to be in the morning. We're going to have Eurozone and UK PMIs. We also have US PMIs later on in that day. But take a look at the US dollar or the euro US dollar as we've broken higher. Now there is, and I'm going to actually go out to a daily chart really quick. There is potentially another trend line here. It's a secret trend line. It's not a secret. It's just something that I've been paying attention to. Obviously, if you listen in to the daily shows, then you would know that this upper trend line here might be more symmetrical. And that would take us basically up to where we're on our way as far as completing this flag pattern up around the 110, 50, 110, 60 level. This is going to be major resistance as far as I'm concerned, because if you look at the dollar index, I'll just take you over to the dollar index. You'll notice we got really key support as well down here. So this might be the trend line that the market's really focused on. That's why I want you guys to be focused on this trend line up here around the 110, 50 to 80 level. It's, give or take, depends what data feed you're looking at, what, exactly feed you might be looking at and who's looking at it. I think this is going to be major resistance. So in other words, if we start clearing above 110, 50, 111, following the PMIs on Thursday, remember we have Eurozone PMIs, UK PMIs, and we have US PMIs. So those three PMIs could be the driver ahead of Powell that drives the dollar lower. Think about that, especially heading into Powell's speech on Friday. All right, now I'd mentioned we have UK PMIs as well. Well, look at sterling. Look at this huge rally we had off the 200 DMA. We broke the 50 DMA as we talked about last week, and it squeezed. Oh boy, did it squeeze. Matter of fact, sterling, following all this UK data, you see once we got past that 50 DMA that I mentioned last week, remember I drew this out for you? I said if it clears the 50 DMA, we are going higher. Oh boy, did we. Now, question is, how much higher can sterling go? Well, I mean, if you look at this channel, it looks like we could go to the 131 level. That's entirely possible. Now, I'm not going to draw that conclusion just yet, but I do want to say that with everything that's happening this week and you look at the dollar index and it closed so close to support. If the dollar starts breaking down, that could be evidence that suggests that sterling is going to trade well above 130 and maybe up towards 131. All right, so just look at some of these extensions that we have if we get above 130.50. That could take us to channel resistance around the 131.50 level. So sterling's looking bullish, euro's looking bullish, and guess what's looking bearish? Well, the dollar index. You know, the dollar index had a very poor showing on Friday. We closed lower. You can see the breakdown happening not only in, you know, the Aussie, as I showed you. You got sterling that's trying to bust higher. You got euro trying to bust higher. You've got US dollar Swiss franc that's maintaining, you know, its resistance and it's turned lower. Even the dollar yen looks like it could roll over. I mean, if that all happens, you have the dollar index that could push below 102.15. So let me just make sure I'm very clear here. If we break 102.15, which is basically right here, if we break below that support, it opens up a lot of downside for the dollar index. We should start trading towards parity or parity, not parity, 100. I keep thinking in the euro, it's not anywhere near parity. It'd be, you know, trading up towards 115 or something like that. But the dollar index should trade back down towards 100. Now, remember, we're talking about PMIs on Thursday, but most important is going to be Friday when we get to Jackson Hole Symposium. Now, with that being said, let me stop here for a second and just mention some of the other data that's happening between Jackson Hole, or excuse me, the start of Jackson Hole is Thursday, but we also have unemployment claims. We have existing home sales. We have New Zealand retail sales, which will be Friday morning in New Zealand, or Thursday night if you live in the US. We have Japanese national core CPI, which I'm going to talk about in 1 second. But then we go into Canadian retail sales and then Powell's speech, which, before I get into it, let's talk about the yen. All right, so we have national core CPI. What if the Japanese CPI shows up a little bit stronger than expected? I mean, look at the dollar yen. We turned from the 38% retracement. You remember talking about that last week? We said, hey, if we turn from the 38% retracement, which we did, almost to like literally the pip. And by the way, speaking of pips, pattern in play, if you guys didn't catch this on Thursday, over here in the patterns in play in Forex analytics, these were established on Thursday by me, both the Swiss and the yen. All right, so we had our eyes on it. I prepped you last weekend on the week ahead video that I was looking for a short up here. I even drew it out for you in green. Let me go ahead and delete that. So hopefully you guys caught that move lower. And if you did, jump in the comments down below. Let me know if you're short any dollar yen or the other yen pairs right now. So, which by the way, I didn't make money in all yen pairs. I got even stopped out of my Aussie yen this last week. So that there's, you know, I've had gains and losses. It's not all gains, as most of you know. I mean, that's no trader has all gains. And if they do tell you that, that's just doesn't happen. Sorry, it doesn't. I know you're sitting there like, oh, I could do that. Yeah, okay. Not as a discretionary trader. Sorry. All right. Anyway, dollar yen, big rejection. What happens if we continue to sell off because the yen strengthens after national core CPI and then the dollar weakens following Powell? Now, why would that happen? Let's stop for a moment and talk about, you know, Jay Powell and why he would try to be a little bit more dovish. Think about where we're at. We're at the end of August. The market is anticipating a rate cut in September. Will Jay Powell set the stage for a more aggressive rate cutting campaign? Will he build the argument knowing that it's an election year, knowing that he's going to look political if he doesn't explain in very good detail why he is looking to cut rates? My opinion is there's the risk, and it's fairly high, that he is going to be more dovish about rates because he wants to set the stage for cutting rates so he can, you know, everybody can say, you know, the Fed is not being political. They've been discussing this for months. What would be a shocker is if he's not dovish. And that we all have to think about. See, I have dollar shorts on right now. I believe he is going to be more dovish. And if he is, I'm probably going to be adding to my short dollar exposure going into next week. But that's not a foregone conclusion. What if, you go back and you start thinking about earlier this year and remember all the times the market's like, oh, we're going to have cuts. Oh, maybe we're not. How about if Powell looks at the US economy and he is really hawkish and we walk away from the idea that the Fed is going to be cutting rates next month? If that happens, what is probably more realistically, technically going to happen is you're going to end up seeing a breakdown in the dollar index early in the week. And then if we get a reversal for some reason because he's super hawkish, you're going to get the dollar getting squeezed like it's nobody's business on Friday. So what I'm trying to map out to you guys and gals is Friday could really be a trend day, meaning if he's dovish and he just lays the groundwork for, not only a quarter point, but maybe a half point, maybe 75 basis points going into the end of the year, we could really see the dollar come under pressure and we could see it really buckle. We could really see it move lower. But the flip side is, if he's hawkish for some reason, and I mean, look at economic data. This is the problem that we had this week. We had retail sales that were strong. Unemployment claims are still, trending in the 230,000 level. Our economic data is not bad. Earnings haven't been bad. How about if he's hawkish? Then what? Then the dollar gets a severe reversal and we start going the other direction. So guys, I think Friday is going to be a huge day for the markets. So I hope you all have cleared off your schedule. You've talked to your honeys, your wife, your husband, your kids, your grandkids. You said, hey, listen, I got stuff to do on Friday. I got to be around for Jay Powell's testimony for Jackson Hole. Make sure you've cleared your schedule for that. All right. Let's continue on. One of the things that happened this week that was a big deal, in my opinion, was this massive breakout in gold. Look at gold. We closed above 2,500. We closed above this trend line that we've had mapped out there. I had been in the camp that we're in an ascending, which I don't. Let me delete that. I've had. If you watch our daily shows, or if you actually listen to or you read the Forex analytics analysis, here, and you just go look at our charts in gold. I've been looking for this ascending channel or ascending wedge, and we closed above it. We closed actually at it. That's pretty bull. It's not bearish when we close at all-time highs. Here's the thing: the RSI, is it divergent? Yes, it's divergent. Can RSI break out, and could gold make a run for 2,600? Yeah. Look at this. You draw a descending trend line here, and next thing you know, price goes higher, right? Price moves higher like this. Guess what RSI does? It breaks out to the upside. So it may be divergent right now, but it may confirm this move going into next week, especially if the dollar is weak next week. All right. So big move in gold. Let's take a real quick look at silver. Silver is going to play some catch up. I think we talked about it a couple of weeks ago at the Gartley pattern. And I'm just going to say this. Wait, hold on. Bam. That happened from like 2 weeks ago. Yeah. Gold's going to play a little catch up. We break above that 50 DMA. Next thing you know, silver. Did I say gold? I meant silver. Next thing you know, silver's trading up towards 30, 31. So this is logical, especially if gold continues to rally. All right, let's take a look at copper. Copper has been beaten down. We were pivoting off of the 200 DMA. That didn't last very long, obviously. But copper, could it bounce back? If equities are bouncing, couldn't we see a move in copper back towards, let's say, right here around 432? I would say it's not unrealistic. We get back to the 50 DMA. Looks entirely possible, right? Now, along the same lines, with all of these moves, if precious metals continue to go higher, take a look at what's happening in the bond market. The 10-year is setting up in a triangle. I mean, if bonds continue to rally, that means yields are going down. That could very easily happen this next week with the Fed chair talking on Friday and with all the data that we have upcoming. We could see the 10-year continue to rally. And you guys know I've talked about this quite a bit in the 10-year. I think we're going to retest this descending trend line long term, which would take us back up towards 117. If you are, that means that yields are going to go down. And if yields are going down, guess what the dollar is doing? It's all connected. Okay. Last set of charts that I want to show to you is going to be the S&P. We'll talk a little bit about the S&P because this is what's going to be really important going into next week. I just met with Jim Welsh from Macro Tides, and we were talking about the S&P here and about the S&P. I guess I must have showed this chart last week. Oh yeah, that we would reject here at the 200 DMA. That didn't happen. So what we've done is we've continued this really gnarly, yeah, that's a surfer word, really, really gnarly squeeze. And that basically you can get rid of this trend line, you can get rid of this trend line, and you can get rid of this, and just realize that we have just squeezed right in the 78% retracement. Now, obviously, this is the weekend. I'm filming this on Friday. Got a couple of days. Anything can happen. Russia, Ukraine, Middle East. But if the coast is clear, could equity markets break out of this, break through this resistance and continue higher? I think it can. I was talking to Jim Welsh, and he still believes that we can trade to all-time highs before we reverse. Whoops, I didn't mean to do that. We can trade to all-time highs before we reverse. Now, obviously, if something bad happens over the weekend that's unwanted by the markets, which is entirely possible, we could see a reversal from here, and then this would end up being a bear market rally. But for right now, we have to be respectful of this big V-shaped recovery that we've seen. Now, if we do hit new highs in the next week or two, I would probably be looking to fade those highs because you're going to have relative strength that looks very, very divergent. By the time that happens, you're going to end up being something like this. Trying to draw it out for you guys. It's just not working. There we go. It'll probably look something like this, where you're going to end up seeing some sort of divergent relative strength, with equities as they bust out to new highs. But you have to let price drive what's happening in the markets. You just have to. Now, if you want more information on what's happening in the NASDAQ and the Dow and the Russell 2000, make sure you're tuned in to our daily shows. If you don't know how to get to our daily shows, all you have to do is go over to forexanalytics.com, go over to here where it says webinars. We have the Flow Show. I actually listen to the recording of the Flow Show, the stream, when I get up in the morning, so I can get up to speed. As soon as I wake up, it already happened like an hour and a half earlier. I listen to the YouTube stream, and then if you want to listen live, you can just register right there, or you can register here for the F.A.C.E show. Remember, those are free shows. It's not just me. I'm only on the F.A.C.E show. I'm only on this one, but it's our team. And Ryan and K-Man will be back next week, so make sure you're tuned in and listening in. So, and then we'll go over what's happening in the rest of the equity markets. By the way, did you know, and I don't think I mentioned this, we still have some earnings next week. We have Lowe's, Toll Brothers, Medtronic, TJ Maxx, Target, Intuit. So there's still, we're still into some earnings seasons, and NVIDIA is going to be coming up in a couple of weeks. So stand by for all of that. All right, this is the point where I want to go into our trade setups from last week, and I'm going to give you the trade setups that I found from this week. All right, so first and foremost, let's talk about last week's trade. So the first one was sell the S&P from 5,300 or 5,400 to 5,470. That did not work out. We just screamed higher, and I'm going to say, you, me, and everybody else was probably thinking to sell the S&P right here. Let's get rid of this. Why? If you don't know why, well, because that was, and this is probably the reason why we squeezed so aggressively on Thursday. You can take this high to this low, right? That was a 618 retracement. We got just slightly above it. And then that economic data came out on Thursday, and look at the aggressive move. Retail sales, every person thinking that we're going into a recession tomorrow saw this soft landing data come out, and not only you got squeezed, I got squeezed. I think the whole market got squeezed, and it was a nasty, nasty move higher. So first trade didn't work out. Second trade, New Zealand yen double top on breakdown of 87.15. We didn't get a breakdown of 87.15. Matter of fact, we're still grinding higher just a little bit, but can you still play that to the short side? I think it's still a good setup, but you have to look at it more like this. So didn't play as a double top. Nope. Scratch, never broke down below 87.15. So one didn't work out, one scratched. The last one, sell dollar Swiss at 87.35. That one worked almost too good. And I'm short. So one worked, one didn't work, one never happened. So one, all right. Hey, it's summer, and you have to agree. This volatility is even more than I had expected. I expected volatility, but this is echelons more than I had expected, which is good. Again, as a trader, it's a good thing. And now if you want to take advantage of this volatility, you should really check out the trader funding program. This is how you can not put your own money at risk. You can access larger amounts of capital if you pass an assessment. By the way, there's a video that's going to be right on our website this next week. You can click right here next week. You will see that moving forward, if you are new to the trader funding program, I'm going to give you a one-on-one onboarding session with me where we talk about you having access to Forex analytics. I'm going to give you some ideas on how I passed. Well, I'll give you some tips on how I passed assessments, and we're going to talk about your strategies and what you're going to do, what you're going to try to do to pass an assessment. If you're taking a reassessment, meaning you failed an assessment, but you have more than $100,000 assessment, you're working on $100,000, $250,000, $500,000, or $1 million. If you take a secondary assessment or another assessment, a retake, you're going to get a one-on-one consultation with me if you want to. And and this has been very beneficial over the last couple of months that we've been doing this. I'll look at your strategy, talk it out with you, ask you what happened, what do you think went wrong, maybe give you some ideas on what I would do if I was trading the strategies that you were trading. And matter of fact, even next week, I'm meeting with one of our traders that's taking a reassessment. What I've found and what our traders have found, it's been a very big benefit to them. So the trader funding program, it's a very good option for you in this environment. So to learn more, you can link down below. You can learn more about the trader funding program. Also watch the video where I think it's like about an 8-minute video. I talk about how I passed an assessment and the steps that I took. All right. Okay. Now let's talk about the 3 setups of this week. So first setup number 1 is going to be the sell the New Zealand dollar at the 200 DMA. So let's talk about this really quick. All right, and let me delete all this stuff from last week. And why would I want to sell the Kiwi at the 200 DMA? Well, first of all, 618 retracement. 60.80 has been a major level of resistance for the Kiwi, and we do this bias chart every single day. You can see the 60.80, 60.85. I think I've written that number over the course of the last few months. I've probably written that number, I don't know, 30, 40, 50 times as being an important resistance or support. It's basically a huge pivot in the market. It's also the 200 DMA. It's also the 618 retracement. It's also the fact that the RBNZ cut rates this last week, and most banks expect them to continue to cut rates all the way into 2025. Now, I know there are a lot of central banks that are going to be cutting rates, but given the fact that I believe that the New Zealand or RBNZ is going to be more aggressive in cutting rates versus the US or any other central bank, I believe that the Kiwi should be sold on rallies. So somewhere around 60.85 or so, that's going to be the place that I'm going to be looking for shorts. And then you obviously got to give it room up into this major trend line, which comes in right around 61.40 or so. So it's not a huge risk for the amount of reward to the downside. You're probably talking about risking 60, 80 pips to make, 150 to 200. So your risk is really just about up here, right? So it's a great risk reward to be on the short side should we get up towards the 200 DMA. Trade number 2, setup number 2, dollar Mexican peso. As I mapped out earlier for you guys, I'm looking to be long dollar Mexican peso, long somewhere around the 1850 to 1860 level. I believe that this triple confluence of support between the 618 retracement, the 50-day, the channel support, this huge green line, this huge pivot that we've had pre-COVID lockdown, big breakdown point, big pivot in the market, I believe you can trade off of it. So 1850, 1860, those are going to be the levels to be on the long side. Again, it's great risk reward. And as a trader, I'm always looking at risk versus reward. If I'm going to risk $1 to make 3 and the macro backdrop aligns with it, that's a good trade setup. Trade setup number 3, long the Euro Canadian while above 150. I do believe the Canadian data is going to be weak, and I believe the euro is strong. So with that being said, let's do a little bit of work here. Okay, we did get this little false breakout, but that false breakout has not led to much other than a consolidation higher. Let's get rid of all this stuff actually too. And let me get rid of this and make that an extension. Okay. Now, if you look at this Euro Canadian a little closer, what I believe is happening here is I believe we have a consolidation happening, which in essence is a bullish consolidation or what you would call a pennant. So while we trade above 150, I'm looking to be on the long side. You get much below 150, you start getting in the 149.50s, you're wrong. Again, risk versus reward. With Euro as strong as it is and Canadian data I expect to be fairly weak this week, I expect that the Euro Canadian will perform better in the weeks ahead. So guys and gals, if you think that this video has been beneficial to you, make sure you give the team a thumbs up, subscribe to the channel below. On YouTube, it doesn't cost anything to subscribe. You just subscribe and hit the bell icon. You'll get notified on your desktop, on your mobile device when one of these new videos come out. And then also, it's free to do that, and it's free to comment down below, and it's free to give a thumbs up. And if I missed anything, get down there and let me know. And obviously, if you feel that these are beneficial to you, jump in the comments below and let me know. Guys and gals, I hope you have a great remainder of your weekend, and good luck this next week. It's going to be a doozy. My name is Blake Morrow with Forex Analytics. I'll see you on Monday morning's F.A.C.E show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.